So, again, the reason somebody thinks a house is an asset is because they lack financial intelligence or low financial IQ. They may have gone to Harvard or in whatever, but if you can't tell an asset from a hole in the ground, I don't know what the heck you can tell the difference of, you know? So, it's really quite simply, the most important word, for those of you in business or finance, know, the most important word is not income, expense, asset, liability. The most important word in the English language for the rich is a word called cash flow. You've got to know where the cash is flowing. So what a rich person is doing is controlling cash flow. So if money comes from an asset into your pocket, it's an asset. So very simply, when I was 9 years old, my rich dad said, assets put money in your pocket whether you work or not. Okay, repeat after me. Assets put money in your pocket whether you work or not. Okay? And very simply, liabilities take money from your pocket. Okay? So what does a liability do? It takes money from your pocket. Okay? So the way you know you have an asset or a liability is very simply this. If let's say you're married with 3 kids and all this stuff, and you stop working, the money coming in is money from an asset, and the money going out is money from a liability. So if you happen to have a little house sitting over here, and it's sucking cash out of your pocket every month, it's a liability. And that's what I was saying. And I got hammered for that in the press. Today, with the subprime mess, you know, it's proven that millions and millions and millions of people who thought they were buying the asset, the American dream, were really buying a liability. And it's not that real estate is good or bad. You see, on the other side of here, if you move this house over here, and every month after paying all your expenses, it puts money in your pocket, then it's an asset. So anything can be an asset or a liability. It's not real estate. It's nothing like this. You know, I write this book here, and it's, you know, been on the New York Times bestseller for almost 7 years now. And every year it puts several $100,000 in my pocket, whether I work or not. That's an asset. So anything can be an asset, you know. So when I was doing this talk in Singapore, and I said, how many of you can name an asset? And this woman raised her hand. I said, yes, what's your asset? She says, my husband. And I said, no, ma'am, I'm talking about an inanimate object. She says, well, he's inanimate. So just think of it this way. Assets, put money in your pocket. Liabilities, take money from your pocket. So this was the big difference between my poor dad and my rich dad. My poor dad was always telling me to get a high-paying job. Nothing wrong with it. You got people like jobs and all this. And my rich dad was very simply telling me, acquire assets. So when I left the Marine Corps in 1974, I had nothing, zero, no money. But I knew I had a plan. I knew what I was going to do. And the number one thing I was going to do was build my business. Second, I was going to buy real estate. And third, I was going to buy paper assets. Today, also commodities, gold, silver, oil, and gas. Okay? So all I work hard to do is build businesses, develop real estate, invest in stocks, bonds, and I have oil and gas, gold, and silver. That's what I work on. So what makes the rich rich is not the school they went to and all this. It's what quadrant, what do you work in? Do you work in this, or you work in here? Okay, so this is where financial IQ starts from, is I focus my time here. I don't care if I make any money. I really have very little interest in money. I want to acquire assets. And that's what my wife and I focus on. And then in 1997, I wrote Rich Dad, Poor Dad and explained what I was doing. And very simply, that's it. So the next thing here was this from my rich dad, was what is called the Quadrant. And I think it's the most important book for people willing to make changes. And the Quadrant stands for Employee, S stands for small business specialist, like a doctor. S for psycho. B stands for big business, and I stands for investor. So the other difference was my poor dad always said to me, and he said, son, go to school so you can get a job. So from the time most people are born, they're programmed to be employees, to work for the rich. And that's the difference. It was my mom, I used to fight with my dad. By the time I was in high school, I'd just fight with him saying, I don't want to be an employee. You know, I just don't want to do it. And I was flunking out of high school and all this stuff because I couldn't write, which is interesting. But so my mom finally intervened, and my mom was a registered nurse. And she says, Robert, you know, stop arguing with your dad. If you want to be rich, go to school and become a doctor. I said, Mom, there's only one problem. She says, what's that? I says, doctors are smart. She says, you got a good point there. You know, you don't. So early on in my life, I knew I wasn't going to survive here. It was obvious to me. So I've only had a job for 4 years, and that was with Xerox. I went to Xerox for the skills, an entrepreneurial skill, learn how to sell. So on the other side of it, my rich dad says to me, he says, Robert, are you basically lazy? I said, yeah. And he says, are you incompetent? I said, yeah. And you're not very bright, are you? I said, no. He says, good, you'll do well in business here. So if you look at this side, my primary focus is to start businesses. I have a gold mining company in China, a silver mining company in Paraguay. I have a lot of real estate companies, oil and gas companies. I just start businesses. I like them. Once they're up and running, the cash flows in, I go do something else. So basically that has been my philosophy since 1974. And that's where we run. Now, on my book on financial IQ, it talks about this a lot here and this. And financial IQ is this, very simply. It is what you do to solve your problems. It's how smart are you at solving your problems. So I often meet people come up to me and say, I got $10,000, I don't know what to do with it. I say, well, how long have you been a moron? You know, and I said, the first thing I would do if I were you, I wouldn't tell anybody you don't know what to do with your money. Because if you start announcing to the world you don't know what to do with your money, there's a lot of people that will tell you what to do with your money, and it's to put it into their pockets. So the problem here is this. So financial IQ is just simply how you handle your financial problems. Now you look at it this way, for many people, when they have financial problems, they get a second job. That's an employee's mentality. I don't get a second job, I start a second business. There's a difference in the mindset of how a person handles a problem, okay? There's a reason for that. Another financial IQ is this. How do you protect your money? The biggest predator in the world is the US government. They will take your money. The problem with making money in this quadrant here and this quadrant here is that these are the most highly taxed quadrants. Now, I'm not against paying taxes. I'm just not want to let them go without a fight somewhere along the line. So the problem with these guys here is they're taxed to at least about 50%. And over here, these are the doctors, lawyers, and accountants. They're taxed horribly. It's just terrible. The laws are horrible for these guys. Over here, I can pay 0% and 0%. The most important thing you can tell your friends is get off your butt and start your own business, even if it's at home, even if it's on your dining room table. Kim and I, my wife, started Rich Dad, Poor Dad on our kitchen table and at a pizza parlor. We had a great time. But once you understand business, the moment you shift from here to here, the tax laws swing in your favor. The moment you tell a kid, go to school and get a job,